Hi, this is Beth Keaton from Griffin-Hammis Associates, and I'm going to talk you through profit and loss statements. What you're looking at on the screen right now is an example of a blank profit and loss spreadsheet. Profit and loss documents are IRS documents that are used to track all business income and business expenses. Because this helps PBOs calculate their net profit for the year that they're going to report to the IRS, the trick with the P&L is that only IRS allowable business income and expenses should be recorded in this part of the business financials. You'll see at the top, the first section is for revenue or the income from sales. And this should be used to calculate and to track any income that's going to be coming in for each and every product line the business has. So if you're working with a business that's going to be selling multiple products or delivering multiple service, you would use a separate line item for each of those to track all the income that's going to be coming in every month of the year, and then it'll total over at the far end. Underneath that, you'll see the cost of sales, and you'll also hear cost of sales referred to as a couple of different things: cost of goods sold, cost of production, and cost of sales are the most common terms. And all three of these are referring to the same thing. And what we're looking for in this particular section is any expense item that goes into the production of the items being sold. So not every business will actually have cost of goods sold. In the business that I work in, we do consulting, and there's no cost of production associated with that. But in the example that we used in the market research of Kylie's cookie business, anything that goes into the making of the cookies, like flour, butter, chocolate chips, all of those raw materials or ingredients would be considered to cost of goods sold. And so they would be tracked in this section. What you want to see here, the required information for cost of goods sold, again, is that cost of production for each and every product line. So if you had, in Kylie's case, if she had cookies and granola bars, there would be two separate lines tracking the cost of the raw materials to make the cookies and the cost of the raw materials to make the granola bars. The cost of goods sold is subtracted from the sales in order to help calculate the gross profit. So if that's a term that you hear about, it's the amount of money that's left after you subtract the direct production cost from the actual sales that are coming in. And that's a separate item oftentimes that businesses will track, this gross profit line. And in spreadsheets like this, it'll be automatically calculated based on the figures that you enter. And we'll show you examples of that in just a second. The final big section of the profit and loss spreadsheet is the expense section. And here you're going to calculate all the different expenses that the business has on a monthly or annual basis. And the required items that I think you'd really be looking at when you're trying to build these for the first time is both the startup costs, so anything that's going to go into starting that business and getting it off the ground, as well as all the different operating expenses, any of the expense categories that people are going to have coming into the business on a month-by-month basis. And some of them may be the same every month, some of them may be varied, some of them may only occur in 1 or 2 months of the year, but you really want to think through what are all the different operating expenses, all the different things that the business owner is going to have to pay for in order to run this business, and get that entered into this expense section of the profit and loss statement. And again, talking to business owners is going to be one of the best ways to get that kind of information. The expense information will be summarized, so it'll be totaled and tallied in the spreadsheets that you're using. And then ultimately, the total expenses will be subtracted from the gross profit margin, and that's going to give you your net profit. And it'll calculate the net profit on a monthly basis. So for every month of the year, you'll see the net profit calculate across the bottom. And then there'll also be the year-end total, which will show you the annual figures. And we'll talk through an example using Stevens woodshop next.